Let's get on this point our market master into the conversation. Sanjay Dutt, Director, Quantum Securities, joins us. Good morning, Sanjay. Good to have you with us.
Morning, Lata. Thank you.
Well, first, the red on the screen that we see, do you think there's more downsides to come? We are a distance away, over 5% of the near-term or the all-time highs of 8630. Do we have more to go in the next couple of months?
I think so, because, this probably might be just a big name, because the major support about 8,300 odd has got broken, and, forget the technicals, but to me, what's worrying me is the currency landscape that we're seeing across the world. If you look at the emerging market currencies, whether the rupiah, the Turkey lira, or whether you look at the, Brazilian currency, all of them have got slammed and are approximately 5 or 7 year lows versus the dollar. Of course, forget the ruble that the route is playing out. Given this backdrop, I will not be surprised that we'll see a lot of volatility in the rupee here, and probably heading to somewhere in the 65, 66 range very soon. And if that be the case, and if that's the thesis that I think is going to play out, I think the markets are headed for a deeper cut, probably another 2 to 5%.
What are you basing this?
I would keep an eye on the currency more than the indices here and the stocks here.
Yeah, I thought I was the only person worrying on this front. But what are you basing this fear on? Is it that you're comparing this with the Mexican crisis, peso crisis of 94, the Asian currency crisis of 98, just a fear that it will be a basket selling of EMs?
I think it will be a basket selling of EMs. We will probably stand out of the lot and be least impacted, or will suffer the minimum damage probably, because our internal fundamentals are pretty good. And people really didn't read the message that the RBI governor gave out very clearly a few days back when he got into that Make in India, Made for India kind of controversy that played out in the media in some spaces. So he sent a very clear message, and all central bankers do more job owning than real specific direction to financial market players as well as Main Street policy makers. So my sense is that over the next few months, that's the place to watch out. And if we get some stability there, then I think the markets will stop here, the equity markets will stop here, consolidate, and probably stand to move up. And I think otherwise there is pain ahead in equities, even in Indian equities in the next few weeks. And we are kind of overowned. We are kind of overowned in any case, because everybody and his uncle is bullish on India for the last few months. And if you recollect, when we spoke towards the end of November, I was quite clear that we had seen the highs for the year, for the calendar year. So, my sense is, let's look at the currency, let's look at the flows. I think those are more important than looking at anything else within India as such at this point of time.
Okay. Sanjay, hi, good morning. In hindsight, this fall in global markets is generally the best buying opportunity for investors who've missed out on the rally. Would you believe that case holds true now as well, or do you think one should just wait for a bit and watch the events play out?
I would like to wait for a bit, even if I buy a tad higher. I don't want to be part of the crowd, the cheerleaders who believe that India has arrived in the global space, and we are like, kind of the island which will always, continue to bloom over the next few years. I think we've got our own internal problems which still haven't been sorted out, whether it relates to the massive, demand issues. We are clearly seeing them in the output numbers, in the IIP numbers, etc., whether it's got to do with balance sheet restructurings. Things are going in the right direction, but execution on ground, when you talk to companies, when you talk to industry, is still not in place. I think it's a few months away. And that pain, the equity investor, particularly the trader, will not be able to withstand, and he'll kind of give up to stronger hands. So weaker hands moving to stronger hands. So in this backdrop, to answer your question in a very short sentence, I think I would wait. I would prefer getting it higher when I see fundamentals on a quarterly basis, monthly numbers of various companies, output numbers improving substantially. I would be happier buying there for the long term.
Okay, and just to persist with that point a little more, probably we are both playing devil's advocate, which is actually the bull's advocate at this point in time. Sanjay, this market has been a buy on dips market, and it has rewarded everyone who has bought on dips throughout 2014. But this is the time to be different, is it?
I think so. I think there is a time in momentum markets, we've had a momentum market over the last 9 months because of various things changing in India, and for the good. And just keep in mind that I'm discussing this in the very short term, means the next few weeks, the next few months, and not over 2, 3, 5 year perspective. I think the music is going to stop, and a lot of us will be caught, on the wrong foot while dancing. So therefore, we'll have to hold our horses and wait and watch. This is not a typical buy the dip, keep buying the dip. There is one dip which always deceives you, and this probably is the dip because I've been hearing this from 8600 when it reached 8400, 8350, 8300, 8250. Everyone kept talking about supports, and every possible support has been broken. So like I said, I would prefer buying higher than actually, dealing with a falling knife as I'm seeing it right now for the last week or so. Every bounce seems deceiving. So therefore, I would like to hold on. And like I'm saying once again, it's not got to do with India. It's got to do with the global landscape, particularly on the currency side and the flows and everything else. That's where I'll keep an eye on and watch as to what. And if we actually see the rupee like I'm thinking it probably might go out to 65, 66 again, then I think the pain would be deeper.
Okay, well, the pain is deepened in the markets as well. So now it's at 8156, the Nifty, which is down about 65 odd points. And the Sensex is down 240 points this morning. So almost advancing to a 1% cut now. If I was a retail investor sitting on some profits now, Sanjay, which are the pockets I should take profits out of? Which are the stocks that you would be most concerned about now?
I think, maximum damage I would see right now, if I were to look at the market, would be in the banks because, that's one area which has really risen very fast, and one would see an aggressive correction there. And obviously, banks are always, get the rough end of it when they are having to play their books, both in terms of currency exposure as well as debt exposure, then yields, etc. So if the rout extends much more, I think we will see a good aggressive correction in the Bank Nifty. And similarly, other financials linked to that, as well as other companies. And I continue to worry about companies who are still living with debt and are not able to sort it out. And if, I keep harping on this fact, if dollar rupee is going to play out like this, companies with dollar debt, and we just probably 2 weeks away from this quarter closing. So once again, we have to live with this, quarterly demon of, currency losses in our balance sheets, particularly with company with debts. And of course, if things start to get worsened, then, we'll have to live with it sometime in Jan, Feb again. Mm-hmm. So I think this is a basket where you need to worry about people with sitting on debt and people and banks primarily, Mm.
Yes, that's a sea change from the position you had in August of 2013 when they were at their worst and you were looking for buys over there. But I guess the trade has played out. Sanjay, pleasure speaking with you.
And Sanjay, you must cheer up. Come on, it's year end. Christmas is around the corner. I'm sure things will get better Jan onwards. So, yeah.
Absolutely.
Lots of holidays coming up as well. Yeah. So enjoy yourself. Thanks for joining us.
Thank you.